Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeta Chan, you're watching Indian Open. Let's go straight to the headlines at this hour. Slower growth in private consumption and fixed investment caused a slight slowdown in India in FY19, said the Finance Ministry in its monthly economic report. Soft consumption demand may reflect in Hindustan Unilever's earnings. The FMCG giant may report a single-digit growth in volumes for the first time in 6 quarters, but profitability likely to remain intact. Standard Life, Aberdeen's Mauritius arm, plans to sell another 1.78% stake in HDFC Life Insurance through an offer for sale. And flights to and from Bhubaneswar and Kolkata have been cancelled as Cyclone Fani makes landfall later this afternoon. And prayers on for all of those who have been evacuated as well and who haven't been evacuated and would be facing the fury of the cyclone. Fingers crossed that nothing too much untoward happens to anybody out there. Anyways, let's take stock of the markets. That's what we want to do at the start of the show. It looks like a flattish trade because the world markets were pretty much had the similar vein of trade in the session yesterday. The US markets didn't do something terribly exciting in trade. So pretty status quo kind of a trade for the S&P 500, the Nasdaq. The Dow would have been down about 0.5%, but could have been any other day. And it's kind of reflecting in the Asian markets, which are open right now. Very few Asian markets trading. Hang Seng, the one that we have, down about 0.85%, but nothing much out there because the SGX Nifty shows that the start could well be marginally in the red, but essentially a very, very flattish start that we have on our hands today. And not surprising really, if you looked at the day of trade yesterday too, it just went in a very, very plateaued way, the entire session of the Nifty yesterday. So no surprise there that we're likely to start off flattish as well, because this is what the nature of trade was in the session yesterday. Commodities though have corrected globally, and that could have a bearing on specific pockets. Now, normally you would see me saying that crude oil prices have corrected and therefore it will be good for the markets. But I think the last few days, crude prices correcting haven't really had, or crude prices moving up did not have a big impact on the Nifty at that point of time. I really doubt that they're pulling back from 75 to 70 will have a big impact on the markets. But watch out for the oil marketing companies. Those could be interesting ones to monitor. Gold, by the way, has fallen to 4-month low post the Fed commentary. I think almost everybody out there in the global markets has taken cognizance of Fed not cutting rates and not sounding like cutting rates near time soon, and gold has cooled off a little bit as well. And other base metals too have corrected. Copper has come off quite rapidly, and that essentially shows the weakness in the base metals. Absence of Chinese demand reflects on the base metals, and that will probably reflect on some of the commodity linked stocks out here in India as well. So do watch out for, from the index to the non-index names, the Hindustan Coppers, the aluminum stocks, all of them could well be in focus in the session today. And Nifty IT could well be in focus today as well. It was a weak trade that we saw in yesterday's session. Almost all the IT companies were down and out in trade yesterday. And Cognizant's guidance cut might actually add to some more pressure on Nifty IT in the session today. So it'll be interesting to see how this index performs the session. The second highest index by weightage, and therefore what IT does has a significant bearing on what the markets do as well. Flows have been okay. We haven't seen FIs pull out money despite the earnings season not quite shaping up the way people would have anticipated, particularly with consumption. But let's wait and watch what happens during the course of the next few days. However, amidst all of this, there are a few stocks that we need to monitor and that will, in all probability, react to news flow that has come out post-market hours yesterday. So HDFC Life and Standard Life to sell up to 3.6 crore shares in open market. The floor price is set at about 390, which is at a discount to the existing price of 417. In all likelihood, that could react a bit in the session today. Don't quite know if it will bounce back post that, but you would suspect that there will be a small reaction downwards because of the floor price at about 390 rupees per share. So watch out for HDFC Life. Watch out for Hero MotoCorp. Yesterday, both Bajaj and Hero MotoCorp went up in the session. However, the April numbers for Hero MotoCorp have been lackluster. Let's wait and watch if this one tends to react negatively today or no. L&T Infotech, it was a nothing kind of a quarter. Revenues flat, net profit flat, margins have contracted. For an IT company to do this when the big wigs are not quite doing this and performing better, you would suspect that the street will not like what they have done this time. So let's wait and watch what happens to L&T Infotech. Bluestar, on the other hand, fabulous numbers, and I won't talk about these in detail because Somit will just come up in a few minutes from now and talk about these. But exceptional set of numbers and should react positively with Bluestar. I don't know if Pinaval Enterprises will react or no, but Lodha, one of the larger clients, the rating has been changed to negative by Moody's, and let's wait and watch if this has a bearing on Piramal or no. So this is one more thing that is very, very interesting. Lastly, I just want to end the trade setup with a word from Ridham Desai. He's put out a note and a tweet, a note, and it speaks about possible MSCI inclusions. Now, when Morgan Stanley speaks about possible MSCI inclusions, you got to take note. I think the entire financial space and insurance in particular, Ridham believes might find inclusions in MSCI. So HDFC Life, ICICI Prudential, SBI Life, ICICI Lombard. So insurance might make a big headway into MSCI, and that's very, very important from the sector perspective. So do watch out for these names. RBL Bank also finds a mention there. So these are all interesting ones. This is a note from Ridham Desai, by the way. We're not saying this. Let's wait and watch what happens here. Okay, let's tell you what's lined up on First Word today. We take a scorecard of the fourth quarter earnings so far. Darshan would join in to tell us how Q4 is shaping up thus far. Summer heat helps Bluestar report the highest ever quarterly sales. Somit Sarkar will bring us up to speed with the numbers of what is arguably the stock of the day. HUL may post strong profit growth despite soft volumes, but could there be chinks in the armor? Agam Vakil will join us with the expectations. And 5 rupee snack packs are turning out to be unhealthy for consumer staple makers. Charlene D'Souza will tell us why. Start off with earnings. We are through the first leg of the March quarter earnings season, and early signs are encouraging as usual, but there are some trends that may play out in the rest of the season which are very, very interesting. Darshan Mehta is standing by with the scorecard thus far, and what can we expect ahead? Darshan, what does it look like optically? Because when you look at consumer companies, you would feel that there is something amiss here.
Yeah, so it's not been good this time around, because if you see the number of strong companies, results that were strong, that has actually come down significantly. So from a 5 to a 6 to a 4 to a 3, now to a 2. So these are just 15 companies. But why these 15 companies are important? Because it's the heavyweights. Reliance is out, Infosys is out, TCS is out. So a lot of these, HDFC Bank is out. So lot of these heavyweights have come out with numbers. While the number of companies that pretty much are report weak set of numbers have stayed the same, it's the strong earnings that are getting converted into an inline set of earnings. So only 2 companies have reported strong earnings so far, Tata Steel and Ultratech, and we'll discuss them in detail. The IT pack has reported inline set of numbers. The banking side, especially the private sector bank, apart from a Yes Bank, has reported inline set of numbers. FMCG is inline. Reliance was also inline in trade, and you're right, companies like a Maruti Suzuki, which probably the auto companies still come out with numbers. Yes Bank, Indiabulls Housing Finance reported slightly weak set of numbers. So that's the heat map for you, 15 companies that have reported numbers. In terms of how the estimates have been, when we started the quarter on 1st Jan, the estimates was 137.4. Feb 15th is when the third quarter officially ended. That time the estimate was pretty much same at 123. When the third quarter, when the quarter actually started, when the first Nifty company came out with numbers, and that was Infosys, the number that we saw was there was a raise as far as estimates were concerned, 142, and even till yesterday when Kotak reported the last number, it stayed at 152. So this time around, as far as earnings are concerned, the absolute number, we're doing better. When the estimate was 55 rupees per share for these 15 companies, the actual number is 56.2, and probably this could have been higher if Yes Bank had probably not reported that loss.
Yeah, we always get these one-offs which tend to hamper expectations and reportage. Tata Motors last quarter. But let's talk about earnings that defied the market expectations, the ones that surprised and those that disappointed, Darshan.
Yeah, so let's start with the companies that came out with strong set of numbers. There were 2. There was Ultratech and there was Tata Steel. Now, Ultratech did well. The unit EBITDA was at a multi-quarter high at 1,090 per ton. So that did well for itself. And if you compare it, the cost efficiencies was better. higher prices was clearly impacted them on the positive side. So Ultratech did well for itself, and the reason that, you know, before the earnings season started, was expected that cement as a pack will do extremely well, especially companies having exposure to South India, because the price hike that they've taken was much higher. Ultratech did well, while the Holcim group companies didn't do well, given the lack of capacity addition. So Ultratech probably did extremely well. The next company is Tata Steel. Higher growth in the European division was seen this time around. The guidance that they've given was strong. Higher volume was offset by the soft prices, and along with Tata Steel, because of the numbers, the entire pack that went well. Gross debt was reduced. The guidance on the debt was also encouraging by Tata Steel. So these were the two companies that came out with a strong set of numbers. But there were a lot of companies that reported weak set of numbers. Bharti Infratel, for one, is the biggest revenue drop in the past 23 quarters. We've seen the consolidation in the telecom space, with from 4 now there's just 3 tenants, and that is something that is impacting the tenancy, and that continues to decline. So Bharti Infratel was a weak set of numbers. It fell 10% post the numbers that came out. The other counter which was weak was Indiabulls Housing. Disbursement was weak, asset quality was also weak. Spreads were pretty stable for Indiabulls Housing. So again, from levels of 900, it's corrected back all the way to 600. AUM falls almost 37% quarter on quarter. So that was something that was weakening for Indiabulls Housing Finance this time around. So reacted negatively. Maruti Suzuki, obviously very weak set of numbers. Higher discounts were given. The raw material costs were much higher. The margins came in much lower. The counter did correct significantly. Guidance was extremely weak at just 4 to 8% sales and production growth for FY20. The entire auto space, we know, is not doing well. The BS6 and safety norms to push car prices higher. So in a scenario where car sales are not happening with higher prices, what will happen is anyone's guess. And as a space, we've seen auto being actually under pressure. The big problem came in was Yes Bank. It corrected almost 30%. Expectation was of a profit. A 1,500 crore loss was seen in Yes Bank this time around. The other impact was that the provisioning was much higher. The NPAs were actually much higher. In fact, almost 50 to 70% higher. Provisioning of 2,100 crores. The asset quality, the ROA probably guidance not the best, of 1% by that too by 2021 and 1.5% by the medium term. So the guidance was also weak. So Yes Bank corrected over 30% when the numbers came out yesterday. Obviously, a little bit of bounce back after a 30% drop. But overall, Neeraj, to sum it up, the numbers have not been that bad this time around. But what the trend clearly is that the strong numbers are not coming. Weak numbers are staying the same. But a lot of inline numbers have started flowing in.
Okay, so this is as far as, of course, the index goes. At the broader end of the spectrum, Darshan, will be interesting to see what HUL does today and what Godrej Consumer does today, because that will give a feeling of what the consumer companies are doing as well, right?
Yeah, so Britannia also, if you saw that, Britannia also inline set of numbers. The only concern, and it fell yesterday, was because of the con call in which, questions were asked about the intercorporate deposits. Even this time around, if you see the Yes Bank, the weightage is not very high. So a 1,500 crore loss will not impact like last time a Tata Motors 27,000 crore loss impacted much higher, because the weightage is also slightly higher than Yes Bank. Yes Bank has a very minuscule weightage on the index. That's why if there was some other company which would have reported this loss, the cut would have been much higher.
Okay. Darshan, thanks so much for putting that into perspective. Trust Darshan Mehta to do this season after season, get you up to speed with how the season is shaping up thus far. Well, city dwellers seem to be prepared for dealing with the summer season this time around, because one of the country's largest AC makers, Bluestar, has reported its highest ever quarterly sales in the fourth quarter. And that in turn has helped the company post some very healthy numbers. So Amit Sarkar Johnson now to take us through the details of the numbers. So Amit, the company has also thrown in a dividend payout to make investors even happier.
Well, yes, the dividend payout was close to 10 rupees per share, which was the highest ever regular dividend that the company has paid. Now, earlier the company had paid a dividend of 8.5 rupees, and as it was a platinum jubilee, the company had given an additional dividend of 1.5. But this is the highest ever regular dividend that the company has paid of 10 rupees. Now, if you see the numbers for Bluestar, it was a strong set of numbers that the company reported for the fourth quarter of financial year 2019, mainly aided by higher revenues. The revenue of the company was up nearly 19% to close to 1,600 crore rupees, and despite a higher raw material prices seen in the fourth quarter, the company's EBITDA jumped nearly 81% to close to 109 crore rupees because of a strong cost control. Now, analysts were expecting the EBITDA number to be close to 83 to 84 crore rupees, but the company reported an EBITDA of 109 crore rupees. Margins expanded to 6.9%. Lastly, the net profit, now that was up nearly 2.5 times to close to 80 crore rupees. Now, this was aided by a higher other income and one-time deferred tax credit that the company received in the fourth quarter. Now, in Q4, the company reported its highest quarterly sales, while the margins after 2 consecutive quarters of decline bounced back to 6.9%. So that is one positive thing coming out from the fourth quarter earnings of Bluestar. Now, another segment-wise performance, if you see, the EMP division or the engineering division of the company saw a revenue growth of close to 21%. However, the EBIT margins remain more or less stable at close to 4.3%, while the AC division saw a strong revenue growth of 19% and EBIT margins expanded to 10.4%, which was the highest EBIT margins reported by the AC division of the company in at least the last 3 years. Now, one more thing that was there for shareholders to cheer for was the dividend, as you mentioned at the start, that was 10 rupees per share. Now, in the earnings release, the company also shared its outlook for both of its division, that is the EMP and the AC division. Now, it said that the prospects for the EMP division looks good on the back of the healthy order book that it has, and for the AC segment, it says that the outlook is positive with the onset of summer in some parts of the country, and because of the new product launches that the company has done in the fourth quarter and post that. However, the company remained cautious of the exchange rates and the commodity prices due to the changing economic environment, and it said that it will be closely watching out for these two factors in the first quarter and for the financial year 2020. Now, it will be interesting to see how the brokerages react post this earnings. Now, the company will hold its conference call, and post that the brokerages will come out with its numbers, because if you see the valuations of Bluestar, now they are largely at par with its peer, that is Voltas, and the 12-month return potential is barely 1% for Bluestar. And given the fact that there has been a big beat on the EBITDA, because analysts were expecting the number to be close to 84 and the number has come in at around 109 crore rupees, so there could be some upgrades coming in, and the target price could also move up higher because of this big beat coming in on the EBITDA front.
Well, let's wait and watch. Bluestar Cooling Solutions, fabulous quarter and likely to react positively. We don't have any brokerage notes as yet. As Somit said, the con call is yet to happen. Post the earnings call, you will get those notes, but the reported numbers, quite spectacular. Let's see how much does the stock react if it does. It's done reasonably well, I must say, compared to, I believe, some of the other cooling solution companies. Let's wait and watch what happens now. Okay, what is arguably going to be a very important number to monitor is Hindustan Unilever. It may deliver single-digit volumes growth for the first time in 6 quarters, but the bottom line is expected to be strong. Agam Vakil is standing by with the earnings expectations, and the reason why I said it is very important, because yesterday when me and Agam were talking on the market wrap, we realized that after what Britannia and what Dabur has done, what HUL and GCPL do today is of paramount importance. Agam.
It certainly is, Neeraj. And again, to bring the point back out, maybe 2 months ago, we had written a story on the fact that HUL was expecting a drop in volumes. Of course, they hadn't really mentioned that, but from the commentary of the management of HUL, a lot of these analysts had actually brought their expectations of volumes down. And, talk about that a little more. Let me just start by talking about what we can expect with respect to this earnings. So when it comes to revenues, we're expecting 10% growth year on year. We're expecting nearly 15% growth in its EBITDA at around 2,348 crores. Coming down to margins, despite the fact that there could be some pressure when it comes to growth, we're seeing an expected about 100 basis points improvement in margins, and profits rising by as much as 19%. Coming down to the all-important volumes number, this is perhaps the first time in 6 quarters is where we could see HUL report single-digit volumes growth. We're looking at anywhere between 6 to 8.5% volumes coming through, and this is of course based on estimates taken from Motilal Oswal Edelweiss and Kotak Institutional Equities. More importantly, what we're also seeing is a delayed summer and perhaps an elongated winter, which may have hurt volumes in terms of planning for products. Rural segment, of course, continues to grow faster than urban, but growth overall may just come off to a certain extent. As far as some of your other factors go, we're also keeping an eye on commodity costs. Now, we really haven't seen too much of a pickup there, and that, of course, will be an advantage for HUL. There is moderate inflation in food commodities, but again, given the fact that HUL has been consistent when it comes to cost-saving initiatives over the past 4 or 5 odd quarters, that's probably one of the other reasons why we may just see 100 basis points improvement on a year-on-year basis. Again, just finally on a word on volumes, because of the fact that we've seen double-digit volume over the last 5 quarters, the base is reasonably high, which means that if we do see even 7 to 8% volumes growth coming in, that will be taken as a positive when it comes to HUL's earnings.
Okay, Agam, just while we're at the topic of it and on topic of HUL, just wondering, GCPL, anything stellar expected, or would they come out with a lackluster quarter too?
No. So again, GCPL is playing with a low base. It's had a very challenging financial year as well as the previous quarter as well. So we're going to yes, the base effect will come into play, which is why we're seeing some improvement.
Okay. Well, it'll be very interesting to see what the 3 or 4 companies in their staple space and different chalk and cheese as their business maybe do. I think it'll be an interesting note from Agam on Monday that we'll talk about. But Agam, thanks so much for putting this into perspective. Important numbers, HUL, very, very important from a quarterly perspective, because consumers trading at premium multiples, and therefore they need to deliver those numbers in order to live up to those multiples. But speaking of consumers, the last piece on First Spurt today is a consumption story as well. We Indians love munching on snacks, and what's more convenient than a small packet that fits into our hands and into our pockets? Consumer companies have also made the most of this trend of small packets, but this bite-sized helpings, or these bite-sized helpings, are extracting a price. Margins are very low. Charlene D'Souza is here for more. So Charlene, why are players like ITC still betting on these small packets if they are pinching the pockets?
Okay, so demand for these packs, that is the 5 rupee packs like salted peanuts, namkeens, wafers, is high, is on the rise, and it's expected to grow in double digits. But however, these packs are hurting the margins of snacks manufacturers, what we've been told. Now, however, now as I said that it's growing in double digits, but the proportion of packaging and labor cost to the overall value of the pack is higher. Now, ITC says that these 5 rupee packs are widely distributed in rural areas and is accounting for a substantial portion of its snack business. And the 10 and the 20 rupee packs actually sell more in your urban areas now. But also we know that demand for rural is outpacing that of urban. Now, if you see the breakup for sales of snacks categories, 75% comes from smaller grocery stores. Supermarket is at 10%, hypermarket at 7%, and other retailers and convenience stores also stand at 7%. If you also look at the breakup in snacks, okay, in the category, you see namkeen dominates with 36%, followed by extruded snacks, that is your kurkure type of snacks is at 32%, chips at 30%, and the rest is at 2%. Now, the other challenge that players are also witnessing, the larger players are witnessing, is that the local players know how to give the consumers the local taste, which, you know, even larger players are trying to do, but because of scale, they don't manage to, not as well.
Okay, that's interesting. And the local players also command a larger pie of the market?
Yes, they do.
Okay, I mean, any numbers out there? And more importantly, the part 2 of my question would be, Charlene, that when we were talking to Amul the other day, he was also saying that while it's great to be pan-India, but local players have now gotten a hang of what to do in that particular market. True. And that's hurting the pan-India players across categories. See, we've only looked at snacks so far, but to say that, you know, we've got a sense from players saying that, you know, local players, since they know how to read the consumer sentiment in that particular area, they have the upper, they have a slight edge over the bigger players, because also in terms of manufacturing, you know, to go that deep down and also to, you know, to cater to only a certain segment also costs them more, right? To customize to that extent. So for a larger player, like say a bigger player like an ITC or something, they would have to then only regionally cater to certain audiences, which is an expensive player. Okay, so maybe the smaller players are not quite able to earn the margins that the larger players might be able to, but by virtue of the business that they are doing,
Yeah.
they are hurting the larger players.
Yeah, but they're also gaining volumes in that particular area and eating into the volumes of the larger players as well. So
Okay.
they dominate that market in terms of understanding what is, like if you see...
And we see in the snacks market that happens.
Yeah, so if you see, even ITC has certain offerings which only cater to the East market, like
Okay.
something like a kaffir lime, the chips which actually cater to the Eastern market is what sells there. But they're trying to customize, it's not like they're not, but
Sure.
you know, for a larger player, it does become difficult.
Okay, interesting story. Charlene, thanks so much for putting that into perspective. And a story around this, I'm sure, would be on the website as well some point of time in the day, if not already. So do log on to BloombergQuint.com, not just for this story, for a bunch of other stories. Do log on to our website and get a hang of all the top newsmakers that you need to know before trade opens today. Charlene, thanks so much for joining in. That's all that we have on First Word today. But two big interviews lined up on Indian Open. Aditya Puri of HDFC Bank explains how the private sector lender managed to keep its bad debt under check. And if that was not all, we discuss Axis Bank's sustainable conservative growth strategy under the new chief Amitabh Chaudhry. It can't get bigger than this. Genuinely, it can't. So look forward to that. And after this break, look forward to doing an entire conversation on the day's trade. So that's coming up too. Stay tuned to Bloomberg Quint Live.